Good morning, everybody. Christopher from Education with my analysis for Monday, the 19th of November, 2018. Hi, everybody. Hope you had a fantastic weekend. We're looking at the matrix this morning. Okay, having a look to see if there's anything out there that really catches our eye. Before we start, this is a video on the four majors. So, briefly, just going to look at the euro, the pound, the US dollar, Swiss franc, and the US dollar, Japanese yen. See how they've been performing over the last week. See how they've looked for any build-ups for opportunities for the week ahead. Before we get any further, let's have a look and see what the euro data is for this week. So let's have a look over here. So straight away, your Forex factory up, and you'll notice that this morning we have, we have the European Central Bank's Financial Stability Review, and we have a Eurogroup meeting taking place today, which is what a week here. The Eurogroup coordinates the economic policies of the 19 euro area member states, and their initiatives and decisions can be or have a widespread effect on the eurozone economic health. Okay, so yeah, we could see Mondays tend to be low liquidity, but you could see a bit of volatility due to this taking place today. For the remainder of the week, you'll see that we have Tuesday. We also have the OPEC JWMC meeting. We've got the German president speaking. Then on Thursday we have the European Central Bank Monetary Policy meeting account details, and then Friday we go into PMI flash service and manufacturing details for both the French and the German markets. Okay, it's the two largest markets in the eurozone. Their details come out. So starting today, we could see a bit of volatility taking place. So keep an eye on that. Right, let's go back to the matrix. Okay, so now if you look at the euro across the top of here, you'll see that predominantly we are seeing a bit of bullish intraday sentiment coming through, and the midsection is looking a bit red. Euro US dollar, I'm going to spend more time looking at right now, so let's bring up that chart. There you have it. So I have my Forex Made Ezee template applied to this time frame. I'm looking at it on a monthly time frame, and let's have a look and see how things progress. So we saw a very bearish month for October. Nice bear candle after a hell of a lot of indecision, a lot of wicks, and price not pretty much going anywhere very quickly. In doing so, still using that 50-period moving average as a support mechanism. Now we know that price has been falling throughout this year. So January, February, March, and April we saw resistance level highs into the 200-period moving average, which essentially was the high point. If I draw a high point of the bigger picture, you'll see that price has been stuck within a channel over the years, and price had come unstuck here at the 200-period moving average, which was a support mechanism for a number of years, but also the resistance level high of this down channel. Okay, so now we saw price falling and heading into the 50-period moving average. Now if we were to see any further continuations of the selling sentiment, it is vital that we saw a continuational candle, a continuation below the 50-period moving average, and a continuation of genuine underlying sentiment in terms of a lot of selling. And the October candle gave us that. Very little wick, a very bear candle. However, saying that, she didn't close lower than the August low. So straight away, if I draw a horizontal line at the August low, you'll see that price at this particular point over time has found a lot of hesitation or resistance through 2015 and 2016, and support through 2017 and a small time frame of 2018. So now the October candle closing lower than the 50-period moving average is indicating that there is genuine negative sentiment behind price, but one would be aware that it didn't close lower than the August low. So essentially here, what we're looking for November, December, and any other month progressing is a continuation below that August low. So for any further selling sentiment, that is. Okay, so if we look at the indicators, you can see that the 200 and currently the 50-period moving average price is trading slightly above, because the month of November we've actually seen a consolidation taking place at this particular point. Hence the reason why we have to be vigilant. Okay, so pay caution to the wind, know the repercussions of trading. Yes, we got a nice strong October candle, but it didn't close lower than the August one, so therefore we're seeing sentiment, selling sentiment, but why have they not made a new low? So that's the caution play of this. The RSI is below the midline, so that's a negative sign in itself. And the MACD, fast line below the slow line, histograms below the midline. Majority of the picture is telling me to sell. I just need to be aware that I have not made a new low over the last 3 or 4 months. Drop down to the weekly, and you can see straight away that August low was the 200 period moving average support mechanism, and you can see that the last couple of weeks we found support at this same level. So there again, a real indication that yes, we might have seen October selling, sentiment coming through, but not enough to actually make it a new low, which would then indicate yes, we have a true continuation. We've just seen selling into a support mechanism or into a viable take profit level. Now everybody's now taken their profit, and you can see that last week's candle has given us a hammer or bullish engulfing candle at a support mechanism. So if this is to be a true reflection of a retracement, bullish incentive retracement, we could always look at the high for the previous weeks above that as a viable target level if we do continue to see further retracements against the downside trend. As I mentioned to you, look to see how the macros paint a picture for this week. As I mentioned to you, we have the Eurogroup meetings today. We also have the OPEC JWMC meeting tomorrow. We have Thursday's data in terms of the European Central Bank Monetary Policy meetings account. And we've also got Friday's data in terms of flash manufacturing PMI results for both the French and the German market. Okay, so there's a lot of data out for the Eurozone this week. Then on top of that, we've also got trade war agreements, between the US dollar, etc. And the uncertainty with Italy is another major concern that's still there and will not go away. So all those will play its part in terms of the level direction. If we look at the indicators, the 50 is above price resisting it, but the 200 is below price supporting it. So we don't have two moving averages either supporting price together or resisting price together. Price is trading between both points, which means that we're in a consolidation. The RSI is below the midline. However, you'll notice that the RSI is now showing signs of convergence. Okay, so not a lot of genuine selling here at the hard right edge if the RSI is not making or trading at the same level as before. MACD, you can clearly see that there's a lot of uncertainty creeping into price because the two moving averages, the fast line and the slow line, has been moving above and below each other consistently over this consolidation period. So not a clear sign of momentum. Up, down, up, down, up, down. It's all over. It's pretty much showing what we're seeing over here. So not really great. So at the moment now, I would be more cautious. Clear correction on this before we can see that if we do see a continuation of the correction, one could always look at the high towards the 50 period moving average as a viable target, or the high that's been the June, July, August high that we've seen so far this year. So as it stands at the moment now, what we could do is we could take the current high of the daily candle, just refresh the chart here, the daily candle high, and then mimic that to the upside. But there again, if we're going to see that as an opportunity, we need to be trading higher than the 50 period moving average to give us a more decisive indication of continuations to the upside. And then one could look to trade towards the 200 period moving average, which is a healthy 223 pips away. Here again, we need to play caution to the wind because of the data today. There again, it's far better just to stand on the side and get a more clearer picture before we can then look for opportunities to enter.